Hi guys, how's it going? Simba here. So the markets are going mental just now. And in this video, I'm going to go over what I think the reasons are for so much craziness in the markets, go over my portfolio, what my future buys are going to be. During this time, it's a good time to buy. When there's a dip like this, there should always be an opportunity to buy. Kind of go over some other things and try and, if you're new to investing or some of the younger guys out there, remember, try not to sell when these things happen. These things are going to happen a lot over the course of the investing journey. So remember, these things are going to happen. Just because it goes down, don't sell off, just hold off, it'll come back up. And this is a very special time for me because I wait for times like these. You know, when there's blood in the streets, like people are trying to sell, that's the best opportunity to buy. That's when I start buying up stocks. So we'll go over all the stocks that I'm buying. Also got a video of I'm not sure if any of you guys know him, but a guy called Jim Cramer. He's an American talk show host. He talks about stocks and shares. I've got a clip of him. He's going at Robinhood investors. Robinhood's like the equivalent of trading 212 here in the UK and in Europe. So he's going at them like retail investors, saying that they're the reason, kind of the reason for this upset in the market, just selling off because they don't have much experience with stocks. So we'll go over that as well. With that being said, let's get into it. Okay guys, so here's one of the first things that happened. And last Tuesday, Tesla announced that they were going to be selling stock to raise $5 billion by selling stock. This diluted the company about 1%. Overall went on to lose 4% of its stock value. And just because that happened, obviously everybody else seen that little drop in the market and they thought, maybe okay, this is my point to try and sell some of my shares right now to take some of the profits out, try and gain some of the money off of Tesla, off of the high that they were at. So if we go down, as of recording this video, down 20% since Thursday. As you see here, among the biggest decliners were Apple, Amazon, Facebook, Zoom Video. But despite their losses, the stocks are still up more than 30% for the year. So they're still up. It's just a little dip here. And we don't know, you know what I mean? It could go down further, it could come up, but you have to do your market research, like research the companies over the long term. Do you think Tesla's going to go up from the price it's at now, or do you think it's going to stay or drop? You need to think about these things. Think about long term, don't think about short term. Yeah, it could go down next week, the week after, the month after, but do you think in 5 years Tesla's still going to be at the same price or lower? And are you able to invest for that 5 years? It just shows you what a little change can do to these people that are on the sidelines, that are like worried or need their money and they're not investing for the long term. That little prick of just Tesla trying to sell those shares, diluting it a little bit. People thought, oh my god, Tesla's going down, let's sell, let's chuck it all. No, you need to try and think about this long term. Look at it, judge it, and hold off. Or some people seen the craziness and just thought, that's it, I'm out, I'm selling everything, which makes it's like a trend. It's like a fear trend. So someone sells, someone sees the price going down, someone else sells, sell, drops. So let's hear Jim Cramer's stance on Robinhood investors, trading 212 investors, like us retail investors, us guys that have just gotten into investing, just starting out, trying to get our feet in there. Let's see his opinion, because he's a seasoned veteran in investing. This is just his thoughts on all the new retail investors.
All last week, and I see today is this parabolic move. Look, Friday's close. I thought it was what we would call phony. I mean, the big rally, please. And I didn't think there was anything to it other than short covering. I think we'll revisit the lows that we saw Friday, and then we have to rethink, because the selling, frankly, is too hard this morning. That doesn't mean that I don't think ultimately the people who don't know what they own shouldn't sell. I'm just saying this is just trying to find price discovery where we were Friday and then be able to figure out what to do. David, you know that kind of rally on Friday based on nothing is really a sign that people are desperate, and shorts we're desperate to cover.
Yeah, and to your point, trying to sort of figure out where there's a real bottom, and if there was one or is one. You know, Jim, it's funny because so many people, oh, these stocks are all down on no news.
Yeah.
Remember all the days, day after day after day, week after week after week, maybe even month after month, where all these stocks were up on no news, and we just sit here and question their valuations to some extent, understanding the underlying businesses were very strong, but nonetheless, this is the price to sales. No, this is the price to sales, and earnings per share multiples that were, through the roof. And here we are now, people wondering, as they often do, well, gee, why is it coming down on no news?
Look, I think it's really important. I put together a list. I have this Cramer COVID-19 index of the winners. You're right, David. I mean, are we looking at times earnings? I mean, everything is time sales. Everything. And what happens when you have that is that the value guys, the S&P guys, not even S&P names, they're not going to come in. The margin guys are going to get margined out. And I am specifically going to call out the Robinhood people. I know that this is something that we're not necessarily focused on in the sense that there's a broader cohort than Robinhood, and I'm using it as a rubric. But many of them are so over their heads that they will get so angry that I said that. But Carl, I remember in March and April of 2000, I remember what it was like. I know there were a lot of people who said, you know what, I'm a millionaire. I'm not going to pay taxes. I'm a millionaire. Carl, these people lost everything. I think it's my job as a guy who follows stocks to say, do you know what the stock is? I read on Twitter this weekend that there were some people who just said, look, you know what? I love XYZ. And when I find out what they do, and it's like, oh.
So I think the main takeaway from that was do your research in the companies. Don't just invest because you hear someone else is investing. Don't just invest because you've heard the name. Research the company. Don't just invest because you think, oh, okay, that price per share looks cheap compared to the other one. Do your research in the company. Make sure that you think it's a long-term investment. Okay guys, now we're into my portfolio here, currently sitting at £4,856. My biggest holding at the moment is AT&T, Apple, and then Tesla. So I will be buying more of Tesla sitting at this price. So my average buy price of Tesla is $432 and it's currently at $330. So I will be trying to buy more of Tesla. Another interesting one that I've been buying a lot of at the moment and that I'm going to be buying more of is Store Capital. Store Capital is a REIT, kind of like O in the same sense, and Warren Buffett has been buying a lot of Store Capital at the moment. And there is a couple of differences between O and Store Capital that I'll go into in another video, but Store Capital is definitely one to look out for at the moment. I think it's got a lot of growth. It was sitting at $39 pre everything that's going on, and it's currently sitting at $27. So I think it'll pass there, and it's got a nice dividend of around 5%. So yeah, the dividend income alone is worth it. Yeah guys, so that's the end of the video. I just wanted to kind of update you. I've not spoke to you in a while, just wanted to get some feedback, show you where I'm at just now, show you where the profile's at, give you some stock market news. And I just wanted to remind guys, if you're new to invest, if you just found this channel, I hope you can hit that like and subscribe. But apart from that, if you've just found this channel, that means you're kind of new to investing, and I've just started my journey as well. And the main thing is, my main takeaway is, don't get peer pressured by news articles like this. They're only there to scare you, right? Their main job, they need to sell news. That's how they get people to come click to their page. It's kind of like clickbait. Yes, S&P drops to the lowest level in a month, but it's in a month. It goes up and down. We just had the biggest raise in the shortest amount of time last month. So these things come up and down. So don't get scared by these articles. Keep investing, keep on with your journey, stay safe, stay healthy, and I'll see you in the next video.